Welcome back to another episode in Benjamin's Boot Camp. This is episode number, I believe, 6. Correct me if I'm wrong. This video is going to be an in-depth analysis on time cycles and judging narrative and finding narrative based off of time, engineered liquidity, and all the above. Right now, you can see in the markets, it is about 7:30 a.m. as I'm recording this, and you can see that we formed relative equal highs and then traded away, and now we're trading below relative equal lows. Anticipating price action with time, we're going to see price move lower until around 9:30. 9:30 comes, we should continue down lower one more time and then turn up for these relative equal highs if we're going to have a bullish bias. Now, today is the day that Trump implies all the reciprocal tariffs across all the countries globally, so it's going to be a bloodbath in the markets, I believe. I think we're going to go down at least 3% in the NASDAQ, maybe even more. But what I am teaching today is narrative based off of time cycles, what to look for with time first. Now, in the previous video, which is the most important video I recommend watching, I'm going to sneeze. Hold on. Okay, never mind. In the previous video, which I recommend watching, I explain time in your entry model. I explain how to find your entry with time. In this video, I'm going to explain how to find your narrative with time. So you don't always need to have your bias on the higher time frame, right? Yes, it's good to do higher time frame narrative, and we are obviously bearish. But today, there could be a bullish setup. Now, you want to create contingencies. You want to create possible scenarios of if price doesn't continue down lower. So looking based off of time, we see that Asian session and London session form relative equal highs. And ICT talks about those time sessions being engineered liquidity, especially 4 a.m. So the fact that price did this earlier on in the morning and is starting to trade away when New York starts to approach means that if we see 9:30 or 8:30 manipulate lower and then the macro form a setup, you can anticipate that these highs are going to be targeted because we're not going to get a manipulation lower if we're going to continue down lower, because then it would be manipulation higher. So pay attention to 9:30. If we continue down lower and then we break structure during the macro or the extended macro, anticipate these relative equal highs to get broken. Now, a key thing to note is that we also have the new week opening gap. So we have a lot of bullish price action that we need to go take. And anticipating if we're going to have a bearish week, you would want to see up and then down. But we're already down 1.1% in the NASDAQ, and it's only 7:30 a.m. So it's a kind of a difficult scenario right now. But it's very important to look at time. In my previous video, I talked about specific times in the days where you're looking for that girl to give you that hint, that twirl in her hair. And that's what we're looking for right now. 7:30, 8:30, 9:30, 10, 10:30, 11. All those times are specific times in injections and volatility where price can manipulate, right? What do you see happens here at 7:30? 7:30 drives us lower below these daily relative equal lows, right? And now it's the 7:30 is about finished, but the 7:30 window, every 30-minute window goes to for the 45. And what do I mean by that? 9:30 goes to 9:45. But you can see that we are traded lower and now we're trading higher. These highs, I'm pretty sure, are our target for today. Because if we are going to be bearish in the week, we are going to trade up higher Monday and Tuesday. Now, why do I say that? Because time-based cycles. Power of 3. Faking up higher to then move down lower. If you open up on the week just and continue to rip lower, which is possible, it's not high probability, right? With this new week opening gap, basically what happened is we opened and traded lower because this wick did not go overlap this body. So we have a major pool of liquidity here that we need to go trade to. So if we're going to go all the way down here, we would most likely trade into here first and then lower because we also have a fair value gap and a order block. Now, looking at time, looking at higher time frame and looking at narrative, What is most likely to be the outcome here? I personally think that Monday, because it's Monday and it's usually low probability, with all the global factors on the side, the tariffs on the side, we could possibly consolidate here and then continue up higher into a fair value gap that will form and then continue down lower to target our lows. Whoops. Oh my gosh. That's good enough. Right? So this is what I'm ideally looking at price action to do is consolidate. Tuesday forms the high of the week into this fair value gap, respect cost of encroachment, trading into this order block, and then continuing down lower. Because we have the tariffs coming up, I think it's today or tomorrow, one of the two. If it's tomorrow, then it gives us a perfect play out of this week. But using narrative, you're anticipating price action to go somewhere before it does. And I'm not talking about your trade. I'm not talking about your short. But you need to anticipate that price is going to fake moving up higher so then you can know when to catch your short. So when price trades into here, if it does, I'm going to take my short in this radius. I'm not going to take my short here because I'm anticipating that price is going to take a higher low. Here, I anticipated that I was not going to take a long setup. A lot of people took a long setup here, right? Right here when the buys respect consequent encroachment, start trading up higher. A lot of people got in long here, but I anticipated that price was going to take these lows first and then take the highs. So narrative is very important in trading because your setup can form before narrative and you can take it and you will lose for the sole purpose of it's not time yet. Using time windows help with controlling the fake outs. But again, time windows don't always work if you have the wrong narrative. 950 to 1010 won't always create your setup that will work if it's in the wrong narrative. And what I'm looking for is some sort of time to bring us lower and then bring us back up higher to these highs. Because these are equal highs. These are pretty high probability. But we don't need to take them. Because remember, we're not tunnel visioning on what's happening. What this looks like so far is accumulation, manipulation, distribution back up to this new week opening gap. This is ideally what I think is going to happen. I think we played out half of the day already. We're going to continue down lower just a little bit more, and then we're going to reverse up higher, take these relative equal highs, and then trade into this new week opening gap. I'm anticipating that we're going to trade down lower again. So I'm not going to look for a long setup until we trade down lower. Now, it's also not part of my model to look for a long setup before 9:30. So it's good to have your borders. It's good to have your 9:30, your time borders. So that means if you're getting onto the chart, you're just watching it if it's not your time yet. And I talk so much about one trade a day, and that's really important because it sets the tone. But narrative is one of the most important things to find, and you really got to focus on time. And if that's on a lower time frame scale or a higher time frame scale, if you're on the higher time frame, now listen to me closely now. Anticipating price is going to go higher before going lower, or going lower before going higher, is a time-based cycle. It's judging price action based off of time because days are times. So I'm anticipating that price is going to trade into this fair value gap and then continue down lower. So Monday, consolidate. Tuesday, manipulate. Wednesday, distribute. And then Thursday and Friday, continue that. That is what I'm anticipating. And you need to apply that on the lower time frame because so many people try to find the weekly profile. Oh, we're going to have a Tuesday reversal, this, that. Okay, why aren't you applying that on the 1 minute? We're going to have a 7:30 reversal. We're going to have an 8:30 manipulation. What you need to do is then look at the Forex counter. Look at what times are happening or what news drives are happening at what time. For example, anticipating just like a weekly profile, oh, we're going to have 9:30 manipulation. So we have 9:30 manipulation. And then I'm like, oh, okay, since we had 9:30 manipulation, I'm going to have a bearish setup for 9:50 to 10:10. So that's what I'm going to look for. You should know what's happening and what's going to play out before you get your trade entry. It's basically like you're doing a magic trick or you're counting cards in blackjack or in poker, in blackjack. And they're playing out the cards and you already know what card's going to come out. That's what you need to do in trading is you need to learn how to count cards. So when the dealer pulls out the blackjack, pulls out the ace, you already know that it came up. You already know that the ace is there, and you're going to bet for it. You kind of get what I'm saying here? You already know that you're going to manipulate. Or if you manipulated, you already know that you're going to go down lower because of the previous things that happened in price at specific times gave you confirmation. So you know what's going to happen. So once you know what's going to happen, which is narrative, it's so easy to find a setup and stick to it. And if you lose, you brush it off your shoulder and you get off the charts. But people that don't have narrative, and you may think you have narrative, but you don't. You may think, oh, I have bias, but you don't have narrative. You don't have the tone of trading. So when you find a setup and it fails, you go for the next one. You go for the next one. You flip biases. You go long. You go short. You flip your biases and you go all over the place. It's so important to know what card's coming up. You're counting cards. That a professional card counter in blackjack, if he counts cards and then he anticipates it's going to be an ace and it's not, he's going to be like, oh, I probably missed a call. I probably missed a card. That's it. So he's going to brush it off his shoulder, wait a little bit, make sure his cards are back in order, and then play again. And you waiting is waiting for the next day. So finding narrative is anticipating price action for multiple moves, and that once you anticipate price action happening, once you anticipate 930 manipulating, once you anticipate break of structure happening during the macro, you can then have high confirmation on taking your entry. You kind of get what I'm saying here? You need to basically win a trade before you take your trade. Because once you find out confirmation in something that couples with your draw on liquidity, that gives you a 20-minute time window during the macro to find a setup. A setup takes more than 5 minutes to form. So what are the odds of finding a winning setup? Very high in that window with the right narrative. So use time in your narrative. Don't just read price action and blindly and then find a setup and take it. Use time. If something happens at a specific time, you're going to trade it. This is a very, very, very important topic here that I'm talking about. And a lot of people overlook it. They overlook it. Sorry, I have a Discord notification for some reason. A lot of people overlook time. It sets the tone for narrative. If you anticipate something's going to happen at a set time, and it does, what is happening? Doesn't mean you're taking that trade, but now you have an edge in the markets. And that's what everybody needs, is an edge in the markets. Once you anticipate that price is going to go up higher and take buy stops, and it does at that time you are anticipating, what does that tell you? That your bias is right, your narrative is right. So when you find that short entry, it's going to win. That brings opportunities to leverage more and win more. But again, you're only taking one trade a day. So make sure you're taking the right trade. And to do that, you trade in a specific time window with the macros. So you guys will learn the break of structures, the market structure shifts, all that, the setup. That's the only setup you really need. If you want to learn more about order blocks, breaker blocks, mitigation blocks, and all of those BS block PD array stuff, you can learn that in ICT Mentorship 2022 and core content. I have notes in the Lion's Den. I have all the core content notes and all the PDFs of every single ICT video. And it's honestly very helpful if you want to know more about it. That is only accessible to people that are in the Lion's Den, is they get notes to every single ICT video. In this bootcamp, I'm just teaching one entry, one model, one time setup, one narrative, one way of trading. If you want to learn the actual advanced ways of trading, which aren't necessary to be profitable, but is probably necessary to be very profitable, then subscribe lower to the Lion's Den and get your 3-day free trial and check out everything. Back to the teaching. It's super important to have narrative based off of time, because you can say, oh, we had manipulation here. How do you know this was manipulation? And how do you know this isn't manipulation? Until after your trade plays out, right? If we're bearish, this would be manipulation. If we're bullish, this would be manipulation. How do you know which is which? Yes, you could say, oh, but we took sell-side liquidity here, manipulation. What if that's not our draw on liquidity? What if we're going to continue down lower? That's why it's so important to use time. So if we go back into the last week and we go to Friday, I think it was Friday, you can see that 9:30. I'm anticipating we're going to be bearish. So prior to 9:30, I was anticipating we're going to go down here. I didn't know we were going to do it this day, but with the setup that formed, that gave me the confirmation that we were going to do that. So you can see, let's say it was like 9:28. I was like, okay, what's going to happen? I'm anticipating we're bearish because my daily bias says we're bearish. All right. That's first is daily bias. Then it's narrative. Then it's time. Well, time is above all, but it's daily bias, narrative, time-based entry. Those are the three things in order on how to catch your trade setup. 9:30 comes, and I anticipated bullish manipulation. So we continued up higher, taking internal range buy-side liquidity, trading into a 5-minute fair value gap. There's our manipulation bullishly, so I have an edge in the markets. I got the edge of the markets here, not here, because we could have still continued higher. But when I got this failure swing to this high, that is my confirmation that, one, we had bullish manipulation. Two, the manipulation is over because we failed to take that high. Three, all I'm waiting for is a fair value gap, and that's it. I got that fair value gap. It traded into it at what time? 9:54 during that macro, and we continued down lower. That also happened on Thursday, right? Anticipating bullish price action. We had relative equal highs up here, right? We took sell-side liquidity at what time? 9:30. The 9:30 to 9:45 window. We moved lower. We broke structure at what time? The 9:50 macro or the extended macro because it was at 9:49. What time do we trade into the fair value gap that broke structure? 9:53, which is during the 9:50 to 10:10 macro. So again, anticipating price is going to tell me a story at 9:30, and the story's going to get played out. The chapter's going to close. The book's going to close at 9:50. Your narrative and your confirmation. Narrative, confirmation. Bias is this. Is the pre-move, anticipating that we're going to go up higher. So bias, draw on liquidity, right? I knew that we were going to go to these relative equal highs. So there's bias. These are equal highs as well down here, but I marked the higher one. Bias, narrative, confirmation. That's all it is 1, 2, 3. The market's moving 3. Accumulation, manipulation, distribution. Bias, narrative, confirmation. Bias is engineered liquidity. Narrative is manipulation. Confirmation is distribution. It all aligns with each other. So next time you look for a trade, make sure, and this is a rule, that you have to have narrative. You have to have confirmation at a specific time. Don't just blindly be reading price action like it's a casino or like you're trying to guess something. You need confirmation. You need to have an edge to take a trade. If you're guessing, you're gambling, and you're going to lose long term. You need to know. And when you fail, when you know, that's where your experience comes in, and it says, I've traded this model so long that I know it works, and this is only a fluke. So if you guys like that video, if you guys like what I talked in this video, be tuned for the next one. I'm not going to be talking about time cycles in the next video. In the next bootcamp video, I'm going to be talking more about specific PD arrays and levels. But it's a very important 2 videos. Episode, I think it was 5 in this episode 6, that you need to be watching over and over again is time and time-based cycles and all of that. So really take notes and go deep into this bootcamp video. If you are at this point and you've watched every single minute of this video and the previous videos, then you should be on the road to becoming profitable. The only step that you need to do is actually apply it to the markets. Remember, 1 trade a day. 9:50 to 10:10 is your entry. 9:30 to 9:45 to 9:30 to 10 a.m. is your narrative teller, your manipulation. Remember the video I said before, how about the girl, the twirling the hair is the hint, that's 9:30, and then the confirmation is her actually physically saying that she likes you? Well, same thing with trading. 9:30, 8:30, whatever time frame you trade, that key time is your kind of hint. It's, I'm manipulating, look at me. Wait for the setup to the opposite direction. You're going to win it. Then 9:50, The setup forms at 9:50. And why do I say 9:50 and not just any setup that forms after manipulation? Because you don't know if that's manipulation or not. And if it's during 9:50 to 10:10 where setups are most likely to be valid, that's kind of confirmation that the manipulation is over. It broke structure, and it's during that time window. So pay close attention to everything that happens in the markets. Anticipate moves before they actually happen, not to catch the trade, right? If you're anticipating that you're going to manipulate here, don't catch along to anticipate the manipulation. Use it as confirmation. Be patient. Wait for your setup, and you'll see how your trading changes. And notice how at the beginning of the video I said this was manipulation, and look at what we're doing right now. We're continuing up higher. Look at what happens. Do you see this fair value gap? Do you see this break of structure? Do you see how we trade into this fair value gap and price respects consequent encroachment? What time is that? 7:51. It repeats, not just at 9:50 to 10:10. It repeats every single day. So honestly, put time first, guys, and your trading will change. And I'll see you guys in the next video. I hope you guys have found this insightful. And until next time, peace.